Hey everybody, it's Pete. Welcome to Stock Trading Pro. Today we're going to talk about which stocks are in play, which stocks to absolutely be avoiding. We're going to jump a little bit into the S&P futures. We're going to take a look at Bitcoin futures. Got earnings on the table today, specifically Microsoft earnings after the close today. And as if that's not enough, we have the Federal Open Market Committee tomorrow, the FOMC, set to announce interest rate decision, which I think a lot of people really believe that this is going to be the time when they finally actually do something. Which that's a big question that we've been getting recently is why so much volatility right now when that story really has been around for a while about raising interest rates. And it really comes down to they're about to do it. And at this point, it's how many times this year that they plan to do it. So we have a lot of stuff to talk about today. I'm going to take you behind the scenes today into last night's coaching call. I want to walk you through a couple of points that I think were very important last night. And one of them, kind of an advanced day trading conversation that a lot of people don't take into consideration. We're also going to talk about a question that we got last night about when should I quit my job and become a full-time stock trader. We answered that in a big way last night as well. If you don't know, I actually owned a trading firm. I had 300 people working for me at one point in New York City. It's a conversation I had virtually every day with 10 to 15 people coming in and wanting to be a trader. So I got a really specific answer about the question when to become a full-time trader. And we're going to break some stocks down from a day trading perspective. We're in short-term trading mode, so I'm going to show you the email that I shared with my community today as well. So we're going to get into some stock picks, probably even getting to some short sale ideas, which we also talked about on last night's coaching call. So stick around. We'll be back in 10 seconds. Okay, so thank you so much for joining me today, everybody. I really appreciate it. I want you to know how much it means to me. Everything we're going to discuss here is for educational purposes. It's up to you to make that final decision. What we got to talk about is the volatility, right? We're going to actually start out with a headline in the Wall Street Journal and talk about something. The Dow Jones Industrial Average actually made history yesterday, and a lot of people aren't aware of that. I wasn't actually until I read it. You know, you started getting in the moment. You're buying and selling stocks all day. You kind of caught up in the flow of price action going back and forth. But the Wall Street Journal reported last night that actually maybe it was this morning, the Dow has never before closed positive after being down at least 1,000 points. That is just absolutely amazing, which is actually what I want to take you over into the email that I sent out last night. I'd really like to share this with everybody because I think one of the biggest things that, let's just say somebody who's never traded for a living before. I don't want to say public or retail or anything like that because you're here at 7:30 in the morning. You're working your tail off. You really want to improve. So I don't want to put a label on like that. But I think that there's stuff that you probably aren't aware of or maybe haven't considered when you're buying and selling stocks because you're kind of like in your house. You're maybe doing it on your phone now these days. And there's certain things that you need to add into your daily game plan. There's really no other way to put it. So I'm going to show you the email I sent out today, and then I'm going to walk you into the coaching program questions that we discussed last night because they were pretty awesome, quite honestly. But I just want to say hello. William Band, I haven't spoke to you in a while. I know last time we spoke, you had eye surgery. I hope that you're doing better. I know we haven't spoken in a long time. I have a special place for eye surgery because I had 2 of them. So I hope that you're feeling better. I really do. We haven't spoken in a while. And I just want to make sure that I say hello to my buddy, John Bates. Good morning, John. Hope you're doing well as well. So I want to walk you over into emails. Last night's email, I just want to walk over through this and let me make this bigger because what I want to walk you through right now, this is the difference between buying and selling stocks. And I'm going to show you the word that we used to use on my trading floor a lot, especially when newer members came into the floor. What I'm about to show you and walk you through, especially for the coaching call that we had last night, this can make the difference between working your butt off and not seeing results. And one little change that you make to the way that you're approaching the market can make the difference between losing less and then understanding when the market lines up really well, how to understand how to make more. This was a big part of what we discussed last night. So I want to share the email with you right now, and we're going to go into a little bit of depth. We're definitely going to talk about some stocks to trade today. I have a couple of short sale ideas, a couple of stocks in the stronger sector that pulled back recently. I might as well just pull up that right now. We'll get into that first because I think that's what a lot of people want to take a look at first. You can see the breakdown of the sectors. Really nothing over the last 5 days is looking that good. We are going to focus a little bit on energy stocks here today. Consumer defensive has been strong, but energy has been the top of the list. But what I want to give you an idea of here as well is as market conditions change, as the stock market volatility contracts and then expands, it's obviously expanding in a much bigger way right now. You really need to be creative, for lack of a better way of putting it. We get a lot of really good questions here in reference to, can you show me your scans? Can you show me how you pick your stocks? Can you show me when the market conditions change? How do you develop that? So normally I have these bigger picture order flow scans where hopefully you've been with us for a while. You know that we're looking at the monthly, the weekly, the daily, and so on and so on. And we're putting those pieces together to stack the order flow. That's essentially what we do when we teach, right? Yesterday, we had to get a little bit creative where we went down a little bit deeper, and we're basically looking for stocks that had relative strength just yesterday. So a little bit longer term relative strength, but more so relative strength yesterday. So what I want to do is I kind of want to inspire you to think about your end of day scanning in just a little bit different way. You're not changing the strategy. I want to be clear about that. You're not all of a sudden going off the radar, going off the reservation and trading something different. You're just changing how you plan to identify ideas coming into the day and the week. So I just want to give you hopefully inspire you to open up your scanning just a little bit. So this is actually one that I put into the community last night. I'm going to bring this up a little bit deeper, and hopefully you can see that here. Let me actually just move this out of the way just for the second, just so you can see. So obviously with the market, and just in case somebody's watching this video at some point later in the future, I just want to give some context. So this is the market, and let's just actually go to the last 5 days. This is what's going on. So the market's kind of all over the place right now. So just in case somebody's watching this at some point in the future, this is what I came up with last night. So above the 50-period simple moving average. So that basically means above the last 10 weeks of trading. Positive for the last month, which is the last 20 days of trading. So you got 10 weeks, 20 days, and positive from today's open. So you can see this pulled up a list of 17 stocks. Now, here's the big thing. And if you want, of course, I'm doing this for you. So if you want, you can take a snapshot of this. I'll leave it up on the screen, and then we'll come back and actually discuss this in a little bit more detail. So that's the list of stocks right there, right? So you can see they're various, but you can also see here a lot of them are in the energy sector. So again, these leave clues as well. So a lot of stocks in the energy sector met this criteria, positive for the last 10 weeks, positive for the last month, as well as positive 1% from today's open. So what does that mean, positive 1% from today's open? Well, when you take the market conditions, we're essentially putting together, and this is a small part of stacking the order flow, but it's longer term order flow over the last 2 weeks, over the last 10 weeks, plus yesterday's price action and where it closed relative to the opening price. So if you watch what we do every day, let me actually just come back on the screen here for a second. We'll take that off just so you can get a really good idea. Our job as traders, our job is putting these pieces together is we're looking to see, does the current order flow match the longer term order flow? Because what we're looking to do is we're looking to find ideas where smart money, where deep pockets are buying stocks and paying higher prices. And the longer they're doing that, the more conviction we should have with hitting that buy button to buy new stocks and hang on to them. And that conviction is where we make those bigger profits. You know, that's another thing that we discussed on our coaching call last night, which I'm going to show you in 1 second, which is expectation ratios. How much do you normally make on your winners versus how much do you normally make on your losers? And putting those together, what can you reasonably expect to make on every single trade? So just to break that down a little bit, if you normally make 500 on your winners, normally lose 250 on your losers, and you have that over, let's say, 50 trades, just for argument's sake. Let's say that's the average over 50 trades. You'll know that on average, you're going to make $250 per trade. So now you can just extrapolate that out and be like, okay, well, if I make 100 trades this month, I know how much I'm going to make. But I want to add to that because we all know the 3-to-1 risk reward ratio. That's kind of like the standard, right? That you want to shoot for on any individual trades. But what we're talking about now, stacking the order flow, is how you have the conviction to hold your winning trades longer. And that's a part of what I want to get into right now. And this is a really important part of the email that I wrote last night. So I want to bring this up on the screen. And again, I want to get you thinking a little bit about how much work you're doing right now before you take risk. And here's the email, okay? Stock futures are lower after a strong but short covering rally. And that's a big conversation right there. Short covering is implying people exiting short sales, not necessarily buying yet, okay? I'm looking for bullish follow through today. In last night's coaching session, we mapped out the charts we expect to see the next couple of days. Now, this is kind of cool because whether or not it unfolds absolutely perfectly over the next couple of days, I and our team have a plan for exactly what we're looking for the market to look like over the next few days. So now, obviously, the market's trading lower. However, that doesn't make a difference because as you see, when we talk about it every day, it's more important to know, and this is something you want to write down, it's more important to know what you're going to do than it is to predict what's going to happen next. Our job is to know what's probably going to happen next, but what we're definitely going to do. And that's the problem that a lot of traders have is you think in your mind that, well, I saw it in a book, so that means it's definitely going to go up. That's not real trading. Real trading is about stacking the odds in your favor and then over a large sample size. Somebody called me out on this yesterday, said a lot of time, which is correct. It's over a large sample size if you're good at stacking the order flow and if you have the discipline to do what you scripted over a large sample size, you should come out on the other side. So now we're going to get into the email. Okay. Actually, you know what? I want to go backwards. I want to show you this is very important. I want to give you a visual. Okay. So we're going to actually first take a look at the SPY. And this is actually how I map out my day every single day, every single week. So here's the visualization I want to give you. Okay. So here's the price action from yesterday, right? I think yesterday we got a ton more selling than anybody reasonably expected. The price action we got yesterday, I think, is what everybody expected last Friday. So you can see how we were working the charts last night. So here's what I want you to visualize. You can see this price action right here, right? We pulled back. We had what we traded into a bullish U-turn. Then the next day we had a rally, which is now at this point a bear market because we're actually making a lower high. Then we have what we know as a sell day or a sell short day. And then the day after that, the market unfolded to the downside because this is more news announcements, right? So if you can visualize these 4 days right here, okay, that is what I'm game planning for here. So if you could visualize that this day is this day, this is the map I'm looking for with this being what I'm expecting today. I know the market's down a little bit right now, but that doesn't mean it can't rally. Okay, so just want to be clear. We're talking about by the end of the day, not necessarily by 9:35 when the market opens today. And then tomorrow is FOMC day and the day after the FOMC. Now, here's the thing. Am I predicting what's going to happen next? No. I'm putting the pieces together to price action of what normally happens over time. So when I say normally happens over time, everybody, me, you, everybody who's ever traded, and probably the easiest way I could ever say this is you need to know what perfect looks like. You need to know how to look at price action and say, okay, I got it. Here's what's most likely going to happen next. And then here's how I'm going to trade it. So that's my mental model. That's the roadmap. That's the clues that I'm looking for based on the bearish activity we have right now, based on the FOMC coming out tomorrow. Now, here's the part of trading that is just missed. Let's just say it's just missed by most people. That's my exact model. I just literally gave you what I'm expecting to have happen over the next couple of days. If it happens, great. I'm ready for it. It's all scripted out. We talked about it. We know the exact price action, what I'm expecting on Tuesday, what I'm expecting on Wednesday, what I'm expecting after the FOMC announcement tomorrow afternoon at 2 o'clock. If it unfolds, awesome. I'm ready. I will hammer it. I will get in there aggressively with conviction. If it doesn't, then I just reevaluate. That's the problem that a lot of traders who are pretty smart don't get. They don't get that last part. You're like, no, it's going up. There's a bull flag. I saw it on page 27, and it said on that video I watched on YouTube that if a bull flag comes out, it's definitely going up. That's the probability of what's going to happen. You as a trader need to pay attention to say, here's what I'm game planning. If it unfolds, I'm going to trade with absolute conviction because I did my research, I did my game planning, and I have conviction in my ideas because I did the work. If you game plan for that and it does not unfold and the selling remains heavy, Then we will shift into probably day trading on the short side, not looking for anything on the long side because the game plan, the roadmap that we had just simply wasn't following through. So again, if you learn nothing from me, and I hope you learn a lot, I really care about whether you learn or not. If this happens, then I plan to do this. It is the golden key to trading success. It's not about the perfect moving average. It's not about the perfect MACD or RSI and all of the other stuff. Those are important. That's not trading. That is chart reading. Trading is how you plan to interact with money, how you plan to put your money in harm's way, how you plan to get the right position size, how you plan profit targets. Is the market conditions on a new buying opportunity 2-to-1 versus 3-to-1? Should you be looking for a higher profit target because the market's lining up, the sector's lining up, the group is lining up, a whole bunch of stocks in that group are also getting buying pressure? Should you add? Should you hold longer? Those kind of things. That's trading. So what we just talked about, if this happens, then I plan to do this. That is trading. Start to really put together, and it doesn't have to be complicated. It doesn't have to be like this big thing. Oh, I need trading, so I need a journal software, and I can't do this properly without finding something on the internet. Get a legal pad. Just say, this is what I expect to have happen. If it happens, trade with confidence. Even if it unfolds and it's a good idea, and if it doesn't make money, it's still what you plan to do. Now, I want to get this across. I'm sorry for pointing, but I get excited when there's something that I learned personally and it made a gigantic difference. It's more important in the long run for you to know exactly what you plan to do and why than it is to believe you need to predict what's going to happen next. I make trades all day, all week. Some of them work out. Some of them don't work out. Yesterday, I walked through 2 trades that didn't, 1 trade that did, 1 trade that did made up for the other 2 losses, okay? One was a day trade that made money. The other 2 were swing trades that lost money. Am I lamenting or crying over the ones that didn't? No, I don't care. My job is to make money. My job is to find ideas that make sense and then take the appropriate size. Now I'm going to get back into the email, okay? All right. This volatility is both amazing and scary. Amazing if you're prepared, super scary if you're not. Because this market requires trading with conviction, you hesitate and it will hurt badly. Here's the big thing we used to talk about in my trading office. Hopium will not work in the current market conditions. I know you. I know there's a lot of people watching this video right now that have that strategy. The market always comes back. I don't need to use stop losses. I am telling you, as I've been pounding on my chest for the last 3 months, that the market conditions have changed, which means that you need to level up right now if you're going to engage in this market. And if trades work out, great. You need a plan for how you plan to interact with them. Do you book profits into momentum? Do you add to those trades? Push up and pause, you're looking for more. Push up and pause, you're out and taking the profits. Now we're going to get into the next part, okay? We're in short-term mode right now. It's the smart play. Now, I didn't say it's the only play. I said it's the smart play. It's the play that is active right now. So let's talk about that. What does that mean if we're in short-term mode? The bigger picture is clearly broken. We have news coming out by the Fed tomorrow. How should you be interacting with the market? Well, if you're not sure what short selling means, that means you need to be going on a much shorter time frame and looking for opportunities to be buying stock. So what is your minimum criteria? Is it just above Monday's opening price and you're going to bite so let's say now it's Tuesday. Is it above Monday's opening price and you start to scan for stocks that are above Monday's opening price and you're only looking to buy those? Are you a day trader and you're only looking for the opening price? Are you micro time frame where you're looking at the hourly chart and you're only trading above the hourly open? If you want to hang on to a swing for a day or two, what is that minimum criteria? Maybe you want to see well bid on the daily chart, which means higher highs, higher lows, and the last price is above yesterday's high, and the last price is also above yesterday's close. So now we just gave you 3 different criteria for determining what short-term means to you. That's real trading. When you have that criteria and all of those things I just discussed, now you know exactly what you're looking for. If you don't know what you're looking for, you're lost. But if you know exactly what you're looking for, the biggest, most prideful moment I could ever have as a coach and mentor and a trader, especially having people in our community, is when somebody says to me, I don't see anything. Do you know what that means? That means that person knows exactly what they're looking for. Ask yourself right now, before you hit that buy button, which we're going to get into hitting the buy button in a second, Do you know exactly what perfect looks like? So I'm going to give you that criteria again, just for the, let's say you want to carry an overnight, you want to do a short-term swing trade in the market. Is the daily chart well bid? So let's go over to the charts and we'll show you exactly what that looks like so you have a visualization. This is well bid. Higher highs, higher lows from one day to the next. That would be the minimum criteria. So obviously we're not seeing that here right now. We got to let today finish, but we're not seeing that. And is the last price above the previous high? Is the last price above the previous close? That's the minimum criteria for putting on new trades. Now we get further into that. And how do you allocate position size to that criteria in the current bigger picture, where if we're looking at the market, that this is the tone of the entire market. So now we're getting into what's the minimum criteria to place a trade. Then we're putting in, based on the bigger picture of the market, what's the right share size for now, and what's the right profit target for now. So now we'll break that down in the email in just a little bit more depth. Okay. Bidding the dip is the classic strategy, but must be done with lower initial position size. And that's because of this. Okay. So let's be clear about that. That's why. Oh, actually, you didn't see that. I'm sorry. I'm on the screen. It's because of this. All right. So bidding the dip has to be traded differently because of that. All right. To give some context, again, this is the big part here. Professional active traders love this volatility, but we aren't trading size. With the Fed tomorrow, expect things to get worse, not better. The market does not like uncertainty. We'll have clarity after the announcement, but be ready for chaos. So now I'm going to challenge you. Is your current day trading plan, is your current swing trading plan that detailed? Literally getting to the point where, should I be buying or short selling? Should I be in cash and doing nothing? Can I personally handle this volatility, or is the smart thing to do to go golfing and not be in front of your screen during the day, not to try and minimize trading where you're working your full-time job and you minimize your trading platform when your boss comes over? Should you even be bothering doing that right now? Which is going to take me into the next question that we actually had from last night's coaching call. So I want to bring you into that as well. All right. So these are the questions that we had. You can see last night's call was over 2 hours. Okay. Over 2 hours. That's kind of a normal coaching call. All right. So we had thinker scripts, we have scripts and a whole bunch of other things. But this right here is the big thing that I want to talk about. This is the big thing I want to talk about: when to become a full-time trader. Now, in case you don't know, I mentioned this quite a bit. I had a trading floor. I've been trading for 21 years. So I went through all of these things myself. And I also had two trading businesses. One of them was the longer term one. It was called Keystone Trading Group, if you want to look that up. Keystone Trading Group. We were on 34th Street and 7th Avenue in New York City. None of that matters to you. What does matter to you is that at one point I had 300 people managing my money. And every single day I'd have people coming in and asking me, can I trade full time? Do you think it's the right time for me to trade full time? Here's the thing with trading full time. Okay. I just can't express this strongly enough. If you have a family, if you have kids, if you have a mortgage, if you have a car payment, if you all of those things, right? And you're making money on the side, and you believe that, oh, if I was only doing this full time, I'd be killing it. I'd be buying and selling stocks and everything would be absolutely amazing. I'm going to give you some real world experience. Okay. If you have all of those things, the family, the kids, the mortgage, the car payment, you have a 401k, your boss pays for your benefits, all of those things. Unless you can replace all of those things with at least 6 months to a year's worth of a profitable track record. So let's just say, for argument's sake, all of those things are worth $12,000 a month to you. Until you can replace all of those things with a real money, different market condition track record, only then should you consider looking at full-time trading and making the jump. Now, that's not my opinion. That's reality. That's my experience over a very long time, and having gone through that myself. We get the question all the time about, well, I don't understand why Joe and John booked that profit. It was up, $5 or $6, and it was only 2 days. Why aren't we hanging on for more? Well, Joe or John is trading full time, and that $5,000 profit is going to pay their mortgage. That's very different from you about to get a $12,000 paycheck, regardless of whether or not you book that profit. There's a very different aspect to trading, quitting your job, trading full time, burning the boats, and you have to make your living off of that. So I'm going to give you a suggestion. I'm not going to say advice. I'm nobody's financial planner here. I'm going to give you a suggestion that if you're thinking about doing that, really think through the total cost of leaving your salary and all of those things versus being able to already replicate those things. Now, you see my bookshelf. I have every book you could imagine on personal development and thinking big and all of those kind of things. Nobody in the world has bigger dreams or wakes up every day and says, imagine if, more than me. However, I will tell you that if you take that leap, it is dramatically different from working and trading on the side, where again, you're checking in on your app during the middle of the day and saying, yesterday specifically, and this is really where the question came from yesterday. If we take a look at the 5-minute chart of the market yesterday, is when somebody sees this kind of reversal to the upside and feeling like, oh my gosh, if I was only trading full time, I'd be doing that every day. It would just be absolutely amazing. I'd be killing it. Why am I working for the man? Why am I working for this boss that I can't stand? So I just want to give you the real world follow-up to the question that we had last night, because I understand the question. If you don't have all of those responsibilities, if you don't have a family, don't have a mortgage, don't have kids, all of those things, it's a different situation. The pressure to be a full-time trader and make your living, and I'm going to give you the reality of the situation. You can go the entire month where it's the last 5 days of the trading month and you're up money. You're actually right at that point. You're like, okay, this is great. Couple of good days unfold, but you don't trade well. And now it's the end of the month and you went from up $15,000 to up $2,000 in the last 2 days of the month. That is possible in trading. Now you'd be like, oh, I would never let myself do that. Yeah, we get into our head. Different things are happening when you're in your head, right? So I want you to know it's absolutely possible to do it. We have a complete structure. I've been teaching people how to do this for a long time. I'm doing it. You just need to really look in the mirror and ask yourself, what is the cost of giving up everything you have? And do you have a track record to get to the other side where you're already replacing that beautiful income, that beautiful retirement plan, that beautiful benefits, which if you don't know, benefits are really expensive. You got to pay for them yourself. So I'm not shooting anything down. I'm giving you some insights into conversations that we have in our coaching program. And these are the raw conversations. And we had a good conversation with somebody last night who was feeling fear of missing out because of how the market rallied yesterday. What's interesting is I'm going to give you a kind of like, for every time you feel like, oh, I would have made it, this is awesome. There's a couple of times when the market's getting crushed and you have longer term positions or even swing trades and you're not even paying attention to the market because you're at your full-time job. Active short-term traders are like, oh, wow, the market's falling apart. I better get out of this trade. But then it closes at the high of the day and you're like, yeah, I'm hanging on to this and I'm making extra money. But meanwhile, the guy or girl who's trading full time is like, man, I got shaken out of that thing. It looked like the world was falling apart. And those are the pluses of you not watching the market every day. So there's stuff on both sides of the market. And again, I'd love to have these conversations with everybody. This is the whole point of, why we're doing what we're doing right now. But I just want you to know that the smart way, especially with, seeing how the volatility is right now, the smart way to approach eventually becoming full-time is incrementally, but the best decision to make, which is the one that I've walked a lot of people through over the years, is you need to have a track record first over several months, if not longer than that, to make that decision with conviction. Well, you need a really special spouse to make that decision with as well. All right. So I thought that was kind of interesting to make sure that we get into that with you. I think that it is kind of real world stuff. We're just going to head on over to the charts here for a second. On the day, Microsoft has earnings after the close today. As far as some of these big tech stocks are hurting with interest rates going up. So we've sold 3 weeks, 4 weeks, almost exactly with the market into the earnings announcement and actually trading lower today. Because there's no obvious order flow right now, other than bearish, I'm going to wait for Microsoft to come out, and then I'm going to look to be involved in it, mostly on a short-term basis. If you're looking for something that had a little bit of positive news last night, IBM actually reported last night and trading higher this morning. So we'll be looking for a shorter-term trade in IBM. The bearish order flow in IBM is still to the downside. What didn't quite trade back into a bullish U-turn yesterday. I do want to talk about Bitcoin. Bitcoin actually traded into what we call a a bullish U-turn yesterday. Is it time to dip in there? No, it's actually just the first sign of reversal into an inside, but you can see that we're clearly still pushing longer term moves to the downside. So next support in Bitcoin is 30,000. So I'm not looking to do anything from a longer term perspective, maybe a little bit shorter term, but that's the first sign. So I want to get that across as well. What we just showed you in Bitcoin is a momentum reversal indicator. It's not an order flow reversal indicator. It could lead to something bigger if that same signal on the daily chart manifests on the weekly and monthly chart. So right now we saw a momentum bullish reversal in Bitcoin. It's going to be interesting to see if that momentum takes us back up to that $42,000 level and whether or not we get back above 42,000 or if that ends up becoming resistance and we make a move down to 30,000. So again, we just mapped out the next few days of what I'm looking for in Bitcoin before I start to do anything. I want to walk you over into some ideas that I'm looking at today. We talked about energy before and which stocks are going to be in my game plan heading into today. So some of the ideas that I'm looking at today include PGR. Okay, you can see very clear order flow. And if we work this chart just a little bit, really don't need to get too complicated here. We are still looking at solid buying here. As a matter of fact, we accelerated with the market taking a hit, PGR. And if we zoom out a little bit and go into multiple time frames, you can see that we are kind of off the charts right now. So there's plenty of room to go. And the stock actually traded into a bullish engulfing candle. So PGR is going to be one that I'm looking at today. Allstate, again, very similar to what we looked at in CF yesterday, which we'll talk about that again yesterday. Bullish engulfing candlestick yesterday means it took out the low and it took out the high. Opening a little bit lower today with the rest of the market. But if we get above this 122 level, which is not that far away, I'll be looking for a run beyond 128. Coles, which had the activist news yesterday. This is really more of a short-term trade. I'm not looking to swing trade this, more of a day trade. And remember what we said about yesterday in Coles. We mentioned this yesterday morning, and you need that short-term line in the sand, the short-term price action to determine how you want to trade those individual trades. Because of this monster gap yesterday, we weren't looking to swing trade Coles. It was a news story. So if you remember, we said this kind of catalyst, this news catalyst means we're looking for it as long as it's above Monday's opening price. That means that's an opportunity telling us that the buyers not only pushed it up, but they're still here because it's above that opening price. So if we take a look at the Coles chart again, that's the line in the sand. We actually drew this yesterday. So you can see 61.63, and we're still above that price right now. And that's the price that we're going to lean on heading into today as well. Foot Locker actually had a gigantic reversal yesterday. You see, we can be working the charts here. It's been sideways for a while. Yesterday, not only big price action, but on pretty good volume, well above normal volume, taking us out of this window. So we're looking for Foot Locker to stay above 45, which looks like it's pretty comfortably above 45 right now. If it does, we're going to start working a position in that direction. If you remember CF yesterday, we drew this very simple line in the sand. But here's the kind of cool thing about CF. It wasn't so much just drawing that bearish downtrend and saying we need to break that. We also noticed yesterday that the volume spikes. So remember, we talked about doing scans before. When you run your scans, make sure that volume is a part of the scans you run. And specifically, one of the scans that I'm looking for every day is increased volume from what they normally do. And it's normally 2 or 3 times normal volume that makes something come up into my radar. So not only did this stock actually have a potential to reverse and break this 3-week downtrend, it also reversed on massive volume. And we got follow through yesterday. So we're going to see, just to give you a full breakdown. So this yesterday was the scan. So you can see that giant spike in volume. That was the first reason it came up on my radar. But that right there is not enough. We ended up trading into what we call a bullish U-turn on massive volume, and we got follow through yesterday. So now we need this to stay above 68. It's a little bit below it today, but that's fine. Last, we want to go into Dick's Sporting Goods. Hey, Dick's Sporting Goods, similar to what we looked at in Foot Locker. So again, what does that tell you? Foot Locker, Dick's Sporting Goods, recovery stocks. So we're starting to see that these kind of get out of the house stocks are seeing some attention. Not Peloton, I'll show you that in a second, but Dick's Sporting Goods is now on my radar. So this is really more not as obvious as Foot Locker, but now in my mind, I'm like, okay, 2 stocks in the same industry group seeing a spike. What else can we possibly take a look at? Well, Nike got an upgrade yesterday. So now we're starting to take a look and see some other stocks. Nike clearly still has bearish order flow. There's really nothing to get excited about here. But again, look at what we talked about. Look at the spike in volume in Nike yesterday, plus the stock got upgraded, massive volume, most over the last 2 weeks, and a bullish engulfing candle. These are the clues that you start to put together as a trader. Now we found 3 different stocks in the same industry group where money is now flowing into those ideas. At the very least, these stocks should now be in your nightly scans to say, am I seeing more than just one day follow through? Did this, remember what we said before about well bid? Do those 3 stocks now go well bid? Do we see higher highs, higher lows, close above the previous high, close above the previous close? That's great. That means now for a second day in a row, we're building the argument, stacking the order flow that buyers came back for a second day. So this might be something a little bit more than just short covering. We might see new buyers step up in those 3 stocks. This is the depth. These are the questions you have to ask yourself. That's interesting. 3 different stocks. I'm going to start watching them now, and I want to see if follow-up comes back into those ideas. We're going to finish up with CVS as one of the stocks. Again, giant bullish engulfing candlestick on good volume. And as I said, a lot of the energy stocks that are still on the watch list that are showing some good order flow over a little bit longer term picture. So I'm looking at XOM, Evan Energy, CVX, Chevron. You can see they're all bullish U-turns with good volume. ConocoPhillips and Hess is going to be on my radar as well. Okay. So we covered a lot of stuff today. What I would recommend doing is going back and watching this video at least one more time, because we really discussed some actual trading stuff today, not just looking at the charts. Of course, I want to thank you for being here with me today. It really means a lot to me. If you don't know, we do this every morning, Monday through Friday, 7:30 to 8 o'clock every day. If you get some value out of these videos, please do me a favor, smash that like button and hit subscribe so you get updates. I'd really appreciate it. So remember, short-term mode right now, gave you the map that I'm looking at over this week. FOMC tomorrow, earnings scheduled for this afternoon for IBM. A bunch of earnings came out this morning, and some more earnings tomorrow on top of FOMC. A lot of volatility right now. Make sure you're trading in the right time frame that matches your personality and your risk tolerance. And if the market's moving a little bit too volatile for you, there's nothing wrong with being in cash. You can go and have a really expensive steak dinner and the finest bottle of wine, and it might be less expensive than trading in this market if it's a little bit too much for you to handle right now. So let's go have an awesome day, and let me know if you have any questions. Leave them in the comments below. All right. Have an awesome day, everybody. Thank you so much. I really appreciate it.